Thank you, Sandeep, and very warm welcome to all the participants. So we will be starting with our first topic, that is purpose of valuation. So whenever you are doing valuation, the first thing you have to see is purpose of valuation. With the purpose of valuation, for different purpose, the value of same asset will be different. If you are doing valuation from taxation purposes, then its value will be different. And if you are doing valuation for a banking purposes, the value of the same asset will be different. So the main thing whenever you are doing valuation, the first thing you have to ask the client is for what purpose he requires the valuation. So as an engineer, whenever we are doing different methods for calculation, let us say, for example, we were calculating bending moment and shear force by different methods, we were arriving at the same result. Whether we were using moment distribution method, whether we were using rotation contribution method or whatever method. But here, with the change of purpose, value will be different. And in the coming lectures, you will see there are three approaches to the valuation: income approach, market approach, and cost approach. And the value you get from all the three approaches will be different. It will not be same for the same asset, because most of the assets here, most of the approaches are from a accounting point of view. In our engineering, we always say 1 plus 1 is 2, but in accounting, it here 1 plus 1 may be 11. So we will be starting this topic, purpose of valuation. And as far as syllabus of this topic is concerned, you have to learn various purposes of valuation, such as bank finance, for auction purpose, for reserve, auction reserve purpose, for building insurance, sale, purchase purpose, then for valuation disputes in court, probate, for partition purpose of an asset, whenever you have to do the partition of an asset for different owners, then for rent fixation, for stamp duty purpose, capital gains tax, and as per Rule 11 UA of Income Tax 1961, then for lease and mortgage purpose of the property, and any purpose not referred here. Then you have to learn valuation standards as per the provisions of Companies Act 2013. Then Indian Accounting Standards, Indian Accounting Standard 16, Indian Accounting Standard 36, Indian Accounting Standard 40, and Indian Accounting Standard 113 as applicable to the valuation. Then you have to learn role of the valuer as an expert witness in the court. Then valuers functions, responsibility, and what are the errors of judgment and professional negligence as regards the value. And the weightage is 3%, means out of 100%, you will get at least 3% questions from this topic. So we will be starting with our topic. First, whenever you are doing valuation for bank purpose. So what is the purpose here? Whenever you are doing valuation for bank purpose, your purpose is to determine the collateral value for loans. Because on the basis of your valuation, bank will give loan to the client. And here the purpose is to determine the collateral value. means the value, because the asset will be kept with the bank as a security. And whenever there is some problem, if the client is not able to return the amount, then what the bank can do? The bank can sell that property in an auction. And what amount the bank will be able to recover in that case? That is the main purpose of your valuation. Means you have to determine its collateral value. So methods we have already discussed that there are three approaches with which you can calculate the value of an asset. Here mostly we will be using comparable sales approach. This is one of the approaches from the market approach. Then if the property is a rented property, then you may use income approach method. And in certain cases, owner occupied properties, you can also use cost approach. So we will discuss these three approaches in detail. As of now, you must understand that in case of banking valuation, depending upon the situation, you have to use any of these three methods. For example, a bank assesses a residential property for 50 lakhs for a home loan. So this valuation, on the basis of pure value, the bank then assess that how much amount he can give to the client. Second purpose may be auction purpose. So in auction, what do you have to do? During auction, a minimum auction price is fixed by the authority. And that price is on the basis of your valuation. So the purpose here is setting a minimum auction price. In case of auction reserve, it means your purpose is to calculate the value so that the authority is able to set a minimum auction price. And the method may be market value with competitive bidding perspective. For example, setting the reserve price of 1 crore for a commercial building for auction. And then purpose may be insurance of the asset. If it is a building, then it will be the insurance of the building. If it is a plant and machinery, equipment or machine, then you have to calculate the value for insurance purpose. So in case of insurance, what you have to find out basically? Anybody, when you are doing valuation, which cost or which value you have to calculate?
Current property value.
Whenever you are doing valuation for insurance purposes, which value you have to calculate? See here, it is replacement cost. Whether it is a building, whether it is an equipment, whether it is a plant or machinery, what you have to find out? You have to find out replacement cost. Means if you have to replace that asset as on today, what would be this cost? That is replacement cost. We will learn this thing in detail during our training. But as of now, you must understand that whenever you are doing valuation for insurance purposes, your purpose is to find out replacement cost of that asset. And of course, for finding that replacement cost, you will be applying replacement cost approach. For example, valuing a building for 75 lakh to cover reconstruction expenses. Next is for sale. And whenever you have to calculate the value for sale purposes, it means you have to find its market value for selling. What you have to do here, your purpose is to determine the market value for selling that asset. And for that, you may be using sales comparison approach, cost approach, or income approach, depending upon the situation, as the case may be. For example, you calculate the value for 60 lakh on the basis of recent sale of similar properties in that particular area. So whether it is a machinery or whether it is a building, whenever you are calculating the value for sale purposes, there you have to find its market value. So we will discuss what is market value in the coming lecture. But as of now, you must understand whenever you have to find out the value for sale purpose means you have to find the value, market value of that asset for selling. At which cost you will be able to sell that asset in the market. And similarly, if you are doing valuation for purchase purpose, your aim will be to find out the market value at which you will be able to purchase that asset. So assessing fair market value for buying. So similarly here the approach may be any of the approaches as the case may be whenever you are doing valuation for purchase purpose. For example, advising a buyer to purchase a property at rupees 55 lakh. Then valuation disputes in court. As a valuer, you may be appointed as an expert of valuation by some court, or some client may hire you for doing valuation for a dispute in the court. So here the aim is resolving legal dispute over the asset value, property value. This property may be building, this property may be any plant and machinery, etc. So whenever you are doing valuation for legal dispute, you have to do detailed appraisal and expert testimony. So what is the difference between valuation for building, whenever you are doing valuation for sale and purchase, or whenever you are doing valuation for a dispute in the court? Here, you should remember, you have to defend your value in the court in all the cases. Whenever you are appointed as an expert by the court, or whenever you have done valuation for any valuation dispute in a court, in the court, you have to defend your value, whatever value you have given. The lawyer of other party will ask you how you have arrived at that particular value. In other cases, you may or you may not be have to defend your value, but in this case, in this particular case, you will have to defend your value in the court. And then to save yourself, which method you will use? Detailed appraisal. What does this mean? See here, whenever you are doing valuation means you are estimating the value of that asset. But whenever you are doing valuation for court, you have to use detailed appraisal. Detailed appraisal means which method of estimate will you use? If you are doing valuation for a building, then which method you will be using? There are many methods of estimating the cost of construction. Then which cost of construction method will be you will be using? Which estimate method you will be using? Anybody? See, whenever you are preparing estimate of a building, you may use center line method, or you may use end-to-end method, land and length method, end-to-end methods. That is detailed cost estimation method. So whenever you are doing valuation for a code, you have to use detailed cost estimate. You have to calculate the quantity of each and every item separately, and then apply the rate, replacement rate. But in case of sale, in case of a purchase, in case of banking, you may use plinth area method. There are different methods of estimation. Clear? Any doubt about this? And then for probate purposes, here the purpose is to assess the value for estate distribution. So what you have to do?
Incoming voice calls.
You have to find the market value as on the date of death of the person for which you are doing valuation. Okay. And next, for partition. Here, whenever you have to do valuation for the partition purpose, then what is your purpose? Your purpose is equitable division among the co-owners. Equitable division among the co-owners. On what basis? On the basis of the value of the property. You may do it on the basis of the area of the asset, or you may do on the basis of the value of the asset. There are two methods of partition. Either you can do on the basis of area of the asset, or you can do on the basis of the value of the asset. But here our aim is to do equitable division among the co-owner on the basis of value of the asset, so that each owner is able to get the same amount of value for his share in the building, if it is a building. So you may be using market valuation considering subdivisional potential. So, for example, dividing a family farm valued at rupees 2 crore among its siblings. Next, for rent fixation. So mostly whenever you are doing valuation for rent fixation, you have to do this thing on the basis of standard rent. So standard rent we will be discussing in the coming lectures, but as of now you must understand that standard rent is the rent which is fixed on the basis of certain laws. As each and every state has its own rent control act, and this rent standard rent is fixed on the basis of rent control act of that state. So they have given certain procedure that how to calculate the rent value of the property. Just hold on. Here your aim is to find fair rental value. Fair rental value means standard rent of the asset. So method analysis of the local rates. Otherwise, whenever you are doing rent fixation, it means you have to calculate the value on the basis, rent. You have to assess the rent on the basis of Rent Control Act of that state. Next, for stamp duty purpose. So mostly the stamp duty is paid on the purchase of some asset. It is on the basis of guideline rate fixed by the authority or the collectorate of that area. And some procedure is there for calculating the value of that property for stamp duty purposes. So here your purpose is assessing value for stamp duty calculation. So you have to calculate market value as per government guidelines. For example, valuing a property at 1 crore for stamp duty during sale. Then for capital gain tax. So you know, whenever the property is sold, the seller has to pay capital gain tax on the basis of the profit he has earned. So here the profit is not the actual profit, it is the indexed profit, which is taxable gain on the basis of which when the seller has to pay the tax. So for that you have to calculate tax on the basis of taxable gain or sale profit. Sale profit means taxable gain on the basis of indexed value. So as a valuer, if you are registered with under section 34 AB of Wealth Tax Act, you are doing valuation for capital gain purposes, you know how to calculate that value. Otherwise, we will discuss it in detail during our case studies. Then Rule 11(4)A of Income Tax Act 61, sorry. So Rule 11(a) of Income Tax Act, what it says, it prescribes the methodology for determining the fair market value of unquoted shares. Unquoted shares are shares of the company that are not traded on stock exchange or other organized financial market, and certain other assets for taxation purposes. So for unquoted shares, you have to do valuation according to the rule 11(a) of Income Tax Act. So here the methodology is to find the fair market value of unquoted equity shares is calculated by using the formula A into B into C into D minus L divided by PE multiplied by PV. This is the basic formula where A is book value of all the assets. We will discuss what is book value, but as of now, you must understand A is book value of all the assets, excluding specified assets like jewelry, artistic work, shares, securities, and immovable property. B is market value of jewelry and artistic work. C is market value of shares and securities as determined by the rule. D is value adopted or assessed by any authority of the government for stamp duty purposes. L is book value of liabilities, excluding certain specified liability. PE is paid up equity capital of the company. And PV is price of the equity shares corresponding to the consideration received from non-resident entity. So you will be using, you need not to remember this formula, but only thing you have to remember is that this valuation is used for calculating the value of unquoted shares. Next is land and mortgage of the property. So what is the purpose here? Whenever you are doing valuation for lease and mortgage of the property, here your purpose is establishing value for leasing or mortgaging. So lease, you know, there are two types of tenancies. One is tenant and lord and landlords, and second type is when the property is given on lease. So the difference is, basic difference is that tenancy is under Rent Control Act. Tenancy is under Rent Control Act, and you need not to get the rent deed registered in sub-registrar's office. But when it is lease, it is under Transfer of Property Act, and it has to be registered in the sub-registrar's office. Basically, aim is tenancy in both the cases. But the thing is the difference between registration and non-registered. Rent, under Rent Control Act, rent deed may be registered, may not be registered with the in the sub-registrar's office. But lease deed has to be registered under Transfer of Property Act. So whenever you are doing valuation for lease and mortgage purpose, here purpose is for leasing and mortgaging. And here you have to calculate the market value with the rental income consideration. For example, valuing a commercial property at rupees 1.5 crore for mortgage. Then for other purposes may be various other purposes needs like financial reporting. You maybe have to do the valuation for financial reporting, for legal settlements, etc. And nowadays, in today's scenarios, there are many other purposes where as a valuer you can do work for calculating the ESG value of the asset, for calculating carbon points of an industry, and many other things are coming in scenario these days, which may not have been discussed here. So these are the things which, as a value, you must know from examination point of view. Otherwise, there are many other purposes where you may have to do value as a value in practical life. Then valuation under Companies Act 2013. You know, valuation under Companies Act 2013, it is to be done by the registered values, and you know you are getting training to become a registered value. After getting this 50-hour training, you have to appear and clear an examination. And after that, you have to submit your application for registration with the IBBI and approve your RVO. And after verification of all your documents, you will be issue a registration certificate as a registered value. And this registered value or registration is done under the rules of registration of values and valuation rules 2017. So here the aim is to regulate the profession of valuation, which was not regulated before the advent of this rules 2017. So whenever you will become a registered value, it will be presumed that you will do valuation impartially and give true and fair value of the asset. Means you will maintain all the ethics needed for a registered value, and you will have due diligence in all the cases. Value must exercise due diligence while performing their functions. So it is, these things are not only important for registered values, even those values which are not registered with the IBBI, they must follow these guidelines. So compliance with the rules means valuation must be conducted in accordance with the prescribed rules. For example, let us consider companies that need valuation of a property for a merger. So then what will be the procedure there? First of all, the audit committee will appoint a registered valuer to conduct the valuation and then valuation process. What the valuer will do in that case? First of all, he will conduct a thorough inspection of the property. He will gather the relevant data and he will use internationally accepted valuation standards to determine the fair market value of the property. The asset may be any asset, land and building, plant and machinery, or it may be security and financial asset. And after going through all these things, he will prepare a valuation report and submit the detailed report to the company, including valuation methodology. He will explain which valuation methodology he will use and what are the assumptions he have assumed and what are his conclusions about the valuation of his asset. So this is an example how you have to do valuation under Companies Act. It is just an example to make the things clear. Next is valuation under Indian Accounting Standard 16. So it is especially for property, plant and equipment values. So here, what is the purpose of doing valuation under this act? The purpose is, this is accounting treatment for the property, that is plant and equipment, to ensure user of financial statement discern information about entities investment in PPE and changes in such investment. Means whatever financial statement you have given, the person who is using that thing, he may be able to get information about the entities investment in
Excuse me, sir. Excuse me, sir.
PE.
Mr. NVS Murthy. Mr. NVS Murthy.
Yes, sir. Yes,
If you're
sir.
not comfortable in the class, please leave the class. This class is totally sponsored by you, and this is your second and last chance. You will be removed
Okay.
from the class without any further warning.
Okay, sir.
If you are not able to concentrate on the class, please leave the class.
Okay, okay, okay.
Yes, sir. Sorry. Please continue.
Recognize condition. Here, initial cost and subsequent cost are recognized as part of assets cost. Measurement, how this value is measured. Property, plant and equipment can be made using cost model of the revaluation model. And depreciation, we will discuss it in detail, what is depreciation and how it will be calculated. So depreciation is charged on the depreciable amount of an asset over its useful life. So impairment, as I already have told you, what is impairment? Assets are reviewed for impairment when there is an indication that they may be impaired. Okay. So next is valuation under accounting standard 36, means impairment of assets. So here the main objective is to ensure that an entity's assets are not carried at more than their recoverable amount. That is important. Here the purpose is to ensure that entity's assets are not carried out in the accounts at more than their recoverable amount. So if an asset's carrying amount exceeds its recoverable amount, it is considered as impaired, and the impairment loss must be recognized. If the asset's carrying amount exceeds its recoverable amount, let us suppose that an asset's amount in the books of account is 50 lakh, but it cannot be sold at more than 30 lakh. Means recoverable amount is 30 lakh, but in the books of account it is 50 lakh. Its impairment is of such nature that it is not able to recover more than 30 lakh. So then according to valuation under accounting 30, section 36, AS 36, it is said that carrying amount exceed its recoverable amount, it is considered impaired and an impairment loss must be recognized. First thing is you have to identify impairment. You have to check whether there is some impairment, and if it is there, then how to proceed. First thing is identifying impairment. An asset is considered impaired if all carrying amount exceed its recoverable amount. The recoverable amount is higher of an asset's fair value, less cost to sell, and its value in use. Clear? And next, how you will be measuring this recoverable amount? The fair value less cost to sell is the amount obtainable from the sale of an asset in an orderly transaction. Means you will be calculating the fair value of, first you will calculate the fair value of the asset. Then from that fair value, you will deduct the cost to sell. And that is the amount obtainable from the sale of an asset in an orderly transaction between market participants. The value in use is the present value of future cash flows expected to be derived from an asset. Understand this thing? The value in use. What is value in use? It is the present value of future cash flow. What is this present value of future cash flow? How will you calculate this value? Present value of future cash flow. Let us suppose you are getting rupees 1 lakh every year from that asset as an income. Means you will be able to get it for 30 years. So you have to calculate the present value of all the amount that you will be able to collect in 30 days, the 30 years. What is the present value that amount which you will be able to get in 30 years? That is present value, and that will be called value in use. How we'll be calculating? We will be doing it shortly when we will be discussing ES purchase. As of now, you must understand what is value in use. It is the present value of future cash flows. How it will be calculated, we will discuss it in detail in the coming lecture. And then recognizing the and measuring impairment loss. If an asset is impaired, the impaired loss is recognized immediately in profit or loss. The carrying amount of asset is reduced to its recoverable amount. According to the main thing you have to remember in case of valuation under Indian Standard Accounting Standard 36 is the carrying amount of the asset has to be reduced to its recoverable amount. Clear? Next is investment property. This Indian Standard Act Standard 40 explain what is investment property. So here your purpose when you are doing valuation under this in accounting standard 40, here the purpose is it specifies accounting treatment for investment property and ensures user of the financial statements can discern information about the entity's investment in such properties. So how it is measured after initial recognition, investment property can be measured using the cost model or the fair value model. So disclosure, entities must disclose information about the investment property, including the methods and significant assumptions applied in determining the fair value. And then Indian Accounting Standard 130, it gives information about fair value measurement. It provides guidance how the fair value of an asset will be calculated. This is Indian Accounting Standard 130. So here it provides guidance how to measure fair value and require disclosures about the fair value measurements. So what is fair value? As of now, we will discuss it short, but we will discuss in detail in the next lecture what is fair value of the property. Here, fair value is the price that would be received on selling an asset or paid to transfer a liability in an ordinary transaction between market participants at the measurement date. So valuation technique, various valuation techniques can be used, such as the income approach method, mass cost approach method, or market approach. So entities must disclose the methods and significant assumptions applied in determining the fair value. Then, role of a valuer as an expert witness. The valuer, as a valuer, whenever you do valuation for a court, what you do? You provide an expert opinion on the value of the property.
Yeah, friends, each and every word during this session can be an MCQ during your examination. This curriculum is designed to provide you with a comprehensive understanding of the knowledge involved in valuation process as per the syllabus, aligning seamlessly with the guidelines laid out by Rule 5.1 to be read with 12.2a. So each and every word during this session can be an MCQ during your examination. So please concentrate on the session. If you are not able to concentrate, please leave the class and don't disturb others. And your attendance will be marked on your face impression. Remember, this meeting is controlled by the observers with the AI, artificial intelligence. If your face is visible on the screen and with your name as per your registration, then only the attendance will be provided. Your face is from here to here, from here to here, not here, not here, not here. And no attendance will be provided for your fan, your table, or whatsoever costly interior done by you. Your attendance will be provided on your face impressions only, not on the costly interior or fan or table or dressing table put behind you. So please concentrate on the lecture and take the maximum benefit out of it. And each and every word during this session can be MCQ during your examinations. Yes, sir. Sorry. Please continue, sir. Sorry to interrupt.
So, as a valuer, you provide an expert opinion on the value of the property. And why you were appointed? Because you have specialized knowledge and experience. And on the basis of your specialized knowledge and experience, you have provided valuation in the court. And evidence, the value present, factual data, methodology used, and reasoning behind the valuation. This is most important. You have to give each and every detail in the valuation when you are doing valuation for the court. Factual data, methodology you use, and the reasoning behind your value. And then assistance to the court. The valuer helps the court understand the complex valuation issues, enabling the judge to make informed decision. Because here you are an expert and you have to make the things clear to the judge the complex valuation issues so that he is able to make informed decision. For example, in a divorce case, the court may need to determine the value of a jointly held property for equitable distribution. So a licensed valuer would be called as an expert witness to assess the property's current market value, considering factors like location, condition, and recent sales of comparable properties. Then what are the functions and responsibilities of registered values or values? First, property appraisal. So as a valuer, your function is property appraisal, means conducting formal appraisals of real property, land property, or the plant and machinery equipment, whichever asset class are you registered, before it is sold, mortgaged, taxed, insured, or developed, etc. For various purposes, means your aim is or your function is to do appraisal on the basis of your experience and knowledge for various assets of the class for which you have done registration for various purposes. Maybe it may be for mortgage, it may be for selling purpose, for purchase purpose, or any other purpose. And then you have to find the market value of the asset. Means you have to estimate the market value. So estimating the market value of the asset to help the clients maximize their profit from sale or from rent agreement, etc. And then as a valuer, you have to comply with the standard. So either you have to use the standards being followed by your RVO, or you may use international valuation standards or the standards prescribed in the red books of RICS. You may use any of these values. And then you have to conduct the valuation ethically. You have to maintain impartiality, integrity, and ethical standards throughout the valuation process. And then you have to prepare and give a detailed evaluation report, including physical inspection records, ownership records, and factors that are affecting the value of the property. So, error of judgment. So, what are the error of judgments which a value may cause? Values can make errors of judgment due to various reasons, such as inadequate information. So many times when you are doing valuation of assets, you may not be able to get the requisite information, especially in case of startup, or in case of building. When you are doing valuation for under insolvency, when you are doing valuation under insolvency, the owner may not be able to give you all the details, and you may not be able to get all the details. In that case, your valuation may have certain errors in that. So, inadequate information means lack of accurate information about the property or market conditions. Second is misapplication of valuation method. So, you know, there are many methods of doing valuation, such as income approach or any approach, and it is that you may have used the wrong approach to value an asset. Then over-reliance on assumptions. Many times when you have not adequate data, you may have made certain assumptions, and you have done over-reliance over the assumptions. So making assumptions without sufficient evidence or verification may cause error in your valuation. So most important thing is market fluctuations. So many times markets are fluctuating at a very short period of time. And if you are not able to account for sudden changes in the market conditions that can affect the property value or asset value, these are certain things which may cause error in your valuation. There are many others. These are a few things which may cause error in your valuation report, and you have to be very careful whenever you are doing valuation, especially when once you are registered, you have to keep all these things in mind. Then professional negligence. So what is professional negligence and when it occurs? Professional negligence occurs when a valuer fails to exercise care and skill expected of a competent profession. Means when you fail to exercise due care, which is expected from a competent profession, then it is called professional negligence. So what it will do? It will result in financial loss or damage to the client. So it may be inaccurate valuation. So providing inaccurate valuation due to oversight or lack of due diligence. It may be conflict of interest. So this is an important thing. Whenever you are doing valuation, you must not have any interest in that asset, direct or indirect interest in that asset. And if you are doing valuation of an asset in which you have some direct or indirect interest, then it is called conflict of interest. Means valuing property in which the valuer has a personal or financial interest. And then failure to disclose. If you are failed to disclose relevant information that could impact the valuation, it is all called professional negligence. Then if you are not complying with the standards, non-compliance with the standards, means not adhering to the established valuation standards and ethical guidelines, it is one of the professional negligence which you may have found. So this is all about the topic purposes of valuation as far as IBBI syllabus is concerned. Thank you very much. If you have any doubt or any question from this topic, we may discuss it here.
So friends, if you're having any question, doubt or query, please unmute yourself and ask your question. Please don't allow us to continue without clarifying your doubts. Any doubt?
Yes, sir.
Yes, sir, please.
Actually, can I continue, please?
Yes.
Thank you, Rajinder sir, for
Yes.
quick walkthrough for the session. We must be enriching ourselves more along with the further detailed discussions. But to start with, I mean, I have a stupid question. You might, what is the collateral? We have been, we are familiar with this particular term in banking, collateral, value collateral. What is exactly collateral mean? Can you please elaborate?
I think Sandeep will be able to make the things clear.
Yes, sir. This is a topic in your syllabus. We will discuss this term in detail in the next lecture.
Okay, sir. Thank you.
Yeah, this is a term in your syllabus.
I have one question. Am I audible?
Yes, sir.
Ji.
Hello, am I audible?
Ji, sir. Please continue.
Actually, I am a IBBI Valuer in plant and machinery. So in the last IBS, that is IBS 2024, so their purpose of valuation, this term has been abolished. Can you explain on that? Purpose of valuation has been abolished in IBS 20.
Sir, everything will be clear. This is just an start. All these topics will be discussed as and when they come as per the syllabus. Please don't worry. Everything will be clear in the coming.
This topic comes under section 8 of your syllabus, various purposes of valuation, and contains 3 marks.
Other things will be clear as and when it comes in the syllabus, sir. Please don't worry.
Good afternoon, sir. This is AVL Satyanarayana.
Ji, sir.
Sir, please elaborate this valuation under Indian AS 16. AS means abbreviation can be elaborated.
So this section
Sir, this is
prescribes the
IND AS 16,
Yes, sir.
Indian Accounting Standards.
Accounting standards. Okay, sir.
this
Thank
is
you.
accounting
AS means
standard.
Accounting Standards 16.
Thank you, sir.
In your syllabus, there are a few standards: Indian Accounting Standard 16, Accounting Standard number 36, 40, and 113.
Yes, sir. I have noted it.
These are few accounting standards in your syllabus. We will learn these in forthcoming sessions in detail.
Okay, sir. Thank you.
It is
So
just
it
an
will
overview.
basically it deals with how the accounting treatment for property, plant, and equipment to ensure users of financial statement can discern information about an entity's investment in PPE and changes in such investment. Means from the books of accounts of the company are the financial statements which the company has given you. You will be able to discern the information about how much investment the entity has made in property, plant, and equipment. And how you have to get this information. This procedure or treatment is given under accounting standard AS 16.
Okay, sir. Thank you.
And it gives you how to measure the cost. You may be using cost model, means replacing that property, replacement cost of the property, or you may have to use revaluation model. And then on that replacement cost, basically you have to calculate depreciated replacement cost, not the replacement cost. Basically you have to find out depreciated replacement cost, and how it is to be find out we will discuss in the coming lectures. Any other doubt?
Good morning. I have a doubt. While
Yes,
making a report, we may use different methods. So the methods we follow should be according to some section or standard as per the Valuation Act. I mean, I'm just want to know when we are submitting a report to the court. So all the methodologies, calculation, whatever it may be, it should be as per the section or as per the act or as per the valuation grades. I mean.
yes, sir. Basically, whenever you are doing valuation, you have to use certain valuation standards. What the IBB has prescribed, either you can use the valuation standard prescribed by any RV, or you can use international valuation standards.
That is
Okay.
a part of report writing.
And then the thing is that whenever you are doing valuation for a code, in the code you will have to defend your valuation. And it will be better if you have given each and every detail in the valuation report itself, so that you are able to defend that. Because in either in case of banking, you may use plinth area method for calculation the estimated cost of construction. But whenever you are doing valuation for a code dispute, you have to give detailed cost estimate, detailed cost estimation method. That would be better, so that you are able to defend yourself. In plinth area method, you may not be able to defend yourself easily in the bank, in the code. So basically, this is a problem. Of course, you have to use valuation standard will remain the same, does not make any difference. But your approach is should be different. Because in 100%, you have to defend your valuation. And in case of others, it may be 2 or 3% chances you have to defend your valuation. Any doubt?
Yeah, sir, in Mr. Tarun, Mr. Kranti Kumar, this we will cover in chapter number 10, report writing. It consists of 3 marks. We will take this chapter probably tomorrow or day after tomorrow. All the concept will be cleared in that chapter. Yeah, any other doubt?
Excuse me, sir. Can we be supplied with this PPT so that we are able,
Yes, sir.
I am
Yes, sir.
able
Yes,
to
sir.
note.
Everything we will provide it to you, and I will explain from where you will get these this study material on your system. After completing today's session in the evening, we will have a 0 hour in which I will clear all the doubts, and from where you can get this PPT. Yeah, any other doubt? Otherwise, we are going to take a short tea break. Any other doubt? No doubt? So, sir, can we have a short tea break?
Yes, sir.
So, friends, it is 11:55. We will take a short tea break of 20 minutes. We will join sharp at 12:15. 12:15 पे दोबारा जुड़ेंगे. Till then, you can switch off your screens and join 1 or 2 minutes before starting the session. The attendance will be sharp at 12:15. 12:15 पर attendance होगी. Then we will continue with the next subject. Till then, you can switch off your screens.